Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 26th of January and we have as our guest today, Jeffrey Halley, Independent Market Analyst. Jeff, thanks for coming on the show.
Always a pleasure, Brian.
Now, Jeff, before we get your insights, we're going to take a look and see how markets across the region have performed. We're going to start with the KLCI. That is up 0.26%. Shanghai is down 0.39%. The ASX All Ordinaries is up 0.48%. The Nikkei is down 0.48%. The Hang Seng is down 1.17%. And rounding up the numbers, we've got the Kospi, which is up 0.59%. It's a pretty mixed bag. Jeff, tell us why.
It was a fairly modest response to the US GDP numbers, which came in at a stunning 3.3% for the last quarter overnight. Well above expectations, but bond markets hardly moved and stock markets really only eked out minor gains. So to me, it looks like there's a bit of risk reduction or squaring up of books or taking risk off the table into the weekends. And I think that mixed bag that we're seeing across Asia is a reflection of those two factors, a modest response to the GDP numbers in the US and it being Friday and just reducing risk into the weekend.
Now also, I mean, those are stellar numbers. And then we are also then waiting for tonight's US personal consumption expenditure data, which again is a key Fed metric. What are the expectations and how do you think this is going to influence the Fed decision making?
I don't think it's going to influence strongly the meeting next week, which will be the highlight next week for the market. It's the first FOMC meeting of the year. But it is a very closely watched metric by the Fed, and thus it is a closely watched metric by the markets. If we get a number that's somewhere around 0.2%, that will probably reinvigorate this. Fed is going to ease at the end of March, despite the Fed saying they're not going to trade. We could see a boost towards bonds and also see equities rally, the dollar fall into the weekend. Conversely, if that number is much higher than expected, say 0.5 and higher, then that may take some of the heat out of this Fed easing trade.
Now, we have to, because of geopolitics, largely, oil has crept back up above the $80 mark. What is your take on the direction of oil prices, particularly given the fact that it has significant impact and then on inflation expectations?
Yeah, I mean, Brent crude sitting around $81.5 a barrel this morning, and it's cleared that 80 quite convincingly. There's a lot of talk about Middle East tensions underpinning the price of oil. We've all watched that in the news. I don't think it's in the interest of most Middle East producers to have a conflict that spreads so line. I think what markets really need to be looking at is what the Ukraine is doing towards Russia at the moment. And they've been conducting some quite successful long-range strikes on their oil exporting and gas exporting terminals, particularly in the Baltic up by Petersburg, but also on the Black Sea. Those are the two main conduits for Russian exports of energy towards to global one other facility over in the Far East. So if Ukraine is still successful in conducting these strikes and taking these exporting facilities offline, the prospect of Russian energy coming off the international energy markets for some time, I think, could underpin oil. And I think it's something that we need to be watching very closely because they are the second largest producer after the United States.
Now, I want to then look closer to home. Singapore's monthly policy decision is out on Monday. What are the expectations there, and how is that going to influence then the direction of the Sing dollar?
The Singapore dollar's been kept firm by the MAS in order to maintain inflation at lower levels than it otherwise would be, despite US dollar strength through 2023. This is how they manage monetary policy. Now, they only make this announcement every 6 weeks, every 6 months, I'm sorry. I don't expect any change in direction from the MAS on Monday. I don't think they're going to change course until the Federal Reserve changes course, whether that's the end of March or June or whenever. So I think Monday's announcement will be more of the same, and that will follow in the heels of, say, the ECB this week as well, which was pretty much the same mindset.
Now, with the end of the week, it's Friday. What should we be looking out next week? Obviously, things like China manufacturing data and the US non-farm payroll numbers stick out for me.
Yeah, it's potentially going to be a pretty frisky week, especially in the back end of the week from Wednesday. We have China manufacturing data, and I probably don't have to explain too much about how important this is at the moment. China equity markets are having a very tough time. There's a lot of doom and gloom talk around China right now. Very soft numbers in the absence of any concrete government support measures. Just tinkering with RRR rates isn't going to do the job. So if we have very weak China data next week, that could see another wave of selling hit equity markets on that part of the world. We're in February already. I don't know where January's gone so quickly. So, yeah, we have non-farm payrolls at the end of Friday, always good for some short-term volatility. But I think the focus is going to be on the Federal Reserve, the FOMC rate decision on Thursday, Asia time, and the accompanying statement of it. And the markets will be hanging off every single word they're looking for a hawkish or dovish bias.
Now, Jeff, on that note, Jeff, thanks very much for your insights. Have a good weekend, and thanks for coming on the show.
You too, Brian. Take care.
Now, we've been speaking to Jeffrey Halley, independent market analyst, and this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out the show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.